Ever wondered why the price of Bitcoin seems to surge every 4 years? The answer lies in a process known as Bitcoin halving. You see, Bitcoin is not just a digital currency, it's a complex system with its own rules. One of these rules is the halving event, a pre-programmed occurrence that happens approximately every 4 years, or more specifically, every 210,000 blocks of transactions. It's a bit like a heart's beat, regulating the flow of Bitcoin into the market. This halving cuts the reward that miners get for adding new blocks to the blockchain in half. Why, you ask? Well, it's a method to control the supply of Bitcoin to prevent inflation and preserve its value over time. So now you know what Bitcoin halving is, but you might be wondering, why does it cause the price of Bitcoin to increase? The reason behind the price surge after a Bitcoin halving lies in the basic principles of economics, supply and demand. Let's unpack this a little. Bitcoin operates on a deflationary model, which means that the total supply is limited. There will only ever be 21 million Bitcoin in existence. This model is fundamentally different from traditional fiat currencies like the dollar or euro that are inflationary and can be printed at will by central banks. Now let's consider the demand side of the equation. If demand for Bitcoin remains constant or rises, but the supply of new Bitcoins entering the market decreases, the price will naturally go up. This is simply due to the law of supply and demand. But there's more to it. Bitcoin halving also introduces a concept called scarcity. Scarcity is a basic economic principle that states that when something is limited in supply, it has more value. Diamonds, gold, and even water in a desert are all examples of scarce resources that are highly valued. In the case of Bitcoin, its scarcity is programmed. Each halving event reduces the rate at which new Bitcoins are created, making them more scarce over time. This scarcity is one of the key reasons why Bitcoin is often referred to as digital gold. Just like gold, the value of Bitcoin isn't just based on its use or utility, but also its limited supply. The reduction in Bitcoin supply due to halving can lead to an increase in its price, assuming the demand stays the same or increases. A key question remains: what happens after a Bitcoin halving? Well, let's dive in. Post-halving, the reward that miners receive for their efforts is slashed by half. This could potentially lead to a decrease in the number of miners if the cost of mining outweighs the reward. However, this is not necessarily a bad thing. The reduced supply of Bitcoin can drive its value up, offsetting the miners' reduced reward. Now, what does this mean for investors? The increased value of Bitcoin can prove to be an excellent investment, especially for long-term investors. It's like a game of supply and demand, with the scales tipped in favor of those holding on to Bitcoin. So, to quickly recap what we've learned today about Bitcoin halving, this event, which occurs approximately every 4 years, will cut the reward for mining Bitcoin in half. It's a built-in feature of Bitcoin's programming, designed to control the rate of new Bitcoin creation and to mimic the scarcity aspect of gold, thus keeping inflation in check. When fewer Bitcoins are generated, the scarcity increases, potentially driving up the price if demand remains strong. We also touched on the aftermath of Bitcoin halving. Historically, the price of Bitcoin tends to rise after this event, although it's not an immediate effect, and other market factors can also influence the price. In the end, Bitcoin halving is a fascinating aspect of the cryptocurrency world, combining technology and economics in a truly unique way.